Now, focus on Gordon Reach, and let me go across to Anushi to set up the conversation before we speak to the management exclusively. This has been a stellar set of numbers, isn't it?
Right, Tamanna. So it's a very strong set of numbers that we are looking at, and of course, this is aided by execution. Now, a lot of these shipbuilding companies, it's on the delivery timelines and the execution. There's lumpiness in terms of that, which shapes up the quarter-to-quarter performance. We are looking at a revenue growth of around 46%, while margins came at around 9% in comparison with 6% last year. Net profit also, as a result of top-line growth, saw about a 57% of a jump. Now, do note that this margin expansion that we are seeing is despite a 220% of a jump in the subcontracting expenses that we are looking at. So what resulted in this sharp shoot up in terms of this particular line item is something that we should be asking the management for. But the most important piece of information remains the order book. Now, if you just look at the order book, that stands at about 22,500 crore, which implies a book-to-bill ratio of around 4 times based on its FY25 revenue. What is interesting is now the couple of orders in pipeline. They are already in the L1 position for NGC ships, that's next generation corvettes, for around 25,000 crores. So with the receival of this order, the order book would in fact double to what the current levels are. Apart from that, the company is also upgrading its capacity expansion also to about 28 vessels versus 24 vessels that was there in the first half of FY25. So focus in terms of defense versus the non-defense business is also something that we should be tracking.
Okay, strong set of numbers. Commodore PR Hari, CMD of Garden Reach, is with us on the show. Sir, thank you so much for speaking with us. It's an absolute pleasure, as always, to speak with you. Very strong quarter. Just want to understand what has led to the margin boost in your view.
Thank you, Tamanna. And yes, we have been able to maintain the growth momentum during Q2. Around 45% growth in revenue, as well as 57% growth in terms of profit after tax year on year. Margins too have increased. As you rightly said, there is almost a 30% rise in our margins. But as Anushri just mentioned, it is order execution. We are in a phase where the orders are getting executed and the ships are getting delivered. Just to place on record, we have delivered 4 ships in the last 6 months. That is almost 1.5 months we are delivering a ship. So all put together, we are in a phase where the ships are mature in terms of construction for delivery. So the revenues are good, and so is the profit.
Commodore Hari, Alex here, and you're better at names than I am. My researcher's name is Anushi. You were nearly there. But having said that, let me ask you about this, because your revenue recognition model has situations where there are peaks and troughs. We seem to be at one of the peaks. How long will this peak last? Will it last till the end of the year? And what, therefore, is the expectation on revenue recognition and revenue growth in the second half?
Thank you, Alex. I just missed the name by a whisker, Shree's name. Anyway, I'll just put it in perspective. Our order book currently is 20,205 crores. So with the next generation corvette project in the final stages of contract negotiation, we are very confident of ending the financial year with an order book plus 50,000 crores. Having said that, since out of this 20,205 crores, the majority still remains with the P17 Alpha project. And with the P7 Alpha project, one ship already delivered ahead of schedule, the second ship now getting ready for delivery. So we are in a phase where the revenue recognition will maintain this tempo, that is growth tempo. So to answer your question, yes, we'll be able to maintain, let us say, year-on-year growth of around 25 to 30% in terms of revenue during the current financial year.
Commodore Hari, Neeraj, sorry, please continue.
Yeah. And then with the NGC, Next Generation Corvette contract, having been signed, would be signed in a couple of months from now, we expect revenue recognition from this particular project, this high-value project, after 2 years. So when the current order book expires, the P7 Alpha project having been completed, the next set of projects that we are executing, the commercial ships and the next generation corporate, will start giving us good revenue. So we don't expect any dip in the revenue growth in the coming, let us say, 3 to 4 years.
I was about to ask you that, Commodore Hari. Good morning, Neeraj here. That if you do 50,000 crores order book this year, then the next set of orders that come in allow you to stick with this 25-30% growth rate for how many years more, sir?
A minimum 2 years. Minimum 2 years. See, I'll put it in this fashion. Now, I mentioned about NGC. Now, there are 3 projects for which the RFP is already out. 2 for Indian Navy and 1 for Coast Guard. That is coming to around 8,700 crores. The DAC has given AON over the last few months for 7 projects for Navy and Coast Guard worth 1,52,000 crores. Plus, there is an aggregated demand of 207 ships from the non-defense PSUs, plus the commercial shipbuilding export orders. So all put together, we expect a major chunk from these, the pie what is available. And the revenue recognition from this also will boost our revenue, which otherwise come from the NGC project. So 2 years, definite, you will see a growth. And after 2 years, it will plateau and then again spike maybe after about 4 years. This is my assessment.
Commodore Hari, just a quick follow-up to that. Apologies, Neeraj. At what point would the capacity be a constraint for you then?
See, we have been gearing up for this demand, the huge demand that is coming. So if you have been following us, our shipbuilding capacity initially was 20, which we increased to 24 during 2023-24. Currently, our shipbuilding capacity is for concurrent construction of 28 platforms. With the ongoing modernization, we intend increasing this capacity to 32 ships by 2026. But still, this will not be enough. So we are going for brownfield expansion as well as greenfield expansion. Brownfield expansion within West Bengal at 3 locations. The DPR is already ready, and we are moving ahead in a fashion so that the capacity gets augmented to 40 ships in the next 4 years. In addition to the brownfield expansion, we are also looking at a greenfield facility in the West Coast. So all put together, we have been systematically increasing our capacity, and we will be ready in another 4 years to take on platforms which currently we are not able to take on. That means platforms above 300 meters length.
Commodore Hari, just as we wrap up this conversation, and you've spoken about the 2-year, 4-year outlook, and in your business that makes sense, in your sector it makes sense. But from a Straits perspective, what is second half looking like? Are you seeing maybe orders or order inflows not coming in, payment cycles not coming in second half, or is it becoming more robust versus H1? What is the H2, H1 sort of comparison that you have?
H2 good.
Yeah.
Equally good.
Equally good. Okay.
Equally.
Okay, that was short and sweet, if nothing else. So H2 equally good. Why do you say that? Why do you say that? What are you expecting in second half to, sustain, including in margins? Because your margins have come up quite well. You're expecting that to sustain in second half?
I'll first talk about the revenue. See, I had mentioned in passing that the P17 Alpha project is at a stage where maximum revenue recognition is happening. We already delivered the first ship. The second ship is currently at a phase where she would be giving us good revenue in the H2. So that is a factor. Plus the anti-submarine shallow watercraft project also, 2 more ships are getting ready. Both these ships also would give us revenue. So the second quarter is going to be equally good as the first quarter with respect to revenue. And we will be able to maintain the margins in the second half of the year too.
So the outlook is looking good. If I had to put it in the 2-word header that Commodore Hari told us, what is second half looking like? Good, equally good. So that's short and sweet. Thank you so much, sir, for speaking with us. Always a pleasure. That's the management of Garden Reach. Stock doing well this morning, about 2.5% up after a stellar set of numbers. Management saying second half also looks good. But let's turn the focus on KPI.